The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Another soft data point on U.S. jobs and another soft day in U.S. equity markets. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. You ready for tomorrow?
What's happening tomorrow?
Oh, nothing.
Something?
Just Friday.
Oh, okay.
It's no big deal.
I'm going to take off.
So let's get a check-in here on where we're trading ahead of the jobs day tomorrow. So the S&P is just down by about 0.2%. To be honest, not that much is actually happening. It seems like it's definitely steady as she goes headed into that jobs number. 10-year yield down by 2 basis points. A little bit of buying as we've been seeing. You jump on that bond bull is a question. And dollar yen is definitely what I'm paying attention to at 143, right? This is all where we're going to see the movement when it comes to tomorrow at 8:31, Romaine.
Yeah, absolutely. And remember, we should point out that at least for today right now, this is the third straight day that we've had secondary economic data, if you will, that have really squashed broad market sentiment. A private ADP payrolls report today showing U.S. companies adding the fewest jobs on a monthly basis since the start of 2021. Now, while ADP traditionally has been a poor prognosticator, its correlation with official government data, that's been increasing this year, and that poses a greater degree of angst for stocks heading into that big jobs report on Friday. And there's good reason for that anxiety, really. Jay Powell himself has made clear that the labor market really sits at the heart of the Fed's decision on when and how quickly to ease interest rates.
It's hard to know what is going to please this market. To your point, we have, half the folks, looking for a weak number that pushes Chair Powell to go 50. And, the expectation is that that's the good news. Alternatively, you have half the folks saying, look, if we're really going to get a soft landing, that means a slow Fed and a stable labor market where consumption holds up.
Meanwhile, the tech trade is out there looking for its own catalyst, if you will, and maybe it might get that one tonight. Chip maker Broadcom scheduled to report results, and Broadcom really needs to confirm that AI demand is still strong if there's going to be any hope for soothing investors' nerves after NVIDIA's gut punch to high expectations last week. Broadcom right now outperforming all but 3 members of the Philly Semiconductor Index so far this year, but the shares are down 16% from that all-time high, Alex, that was reached just shortly after its last earnings report 3 months ago.
Yep, good stuff. And let's get back to that top story, though, when it comes to the job market. And the question is, what the market reaction function is going to be. So Terrell Holt of our team pulled together this data with me and looked at the last year of Jobs Fridays and what the movement was for the S&P. And there was a good chunk of days where you saw a 1% move to the up or downside. Now, clearly, this was in August. We saw that very intense move to the downside of 1.8%. Will we see that same type of move based on tomorrow's numbers? Now, Citi says they're looking at about 110 basis points of swing on the S&P based on options, right? But you take a look at the whisper number and we're like 155,000 jobs. The actual estimate is for 165. So we're still kind of in that range. And I wonder, Romaine, if that leaves a lot of room for some kind of big surprise.
And it remains to be seen here exactly how the market will react to that. Let's get some insights out of our first guest as we kick you off to the close here on this Thursday afternoon. Kristina Campmany, Senior Portfolio Manager of Global Debt Team over at Invesco. Great to have you here on the program.
Thank you so much for having me in.
I feel like everyone's kind of on edge for this. I know everyone says, one data point, don't make of it. But when you kind of look at the amalgamation of data that we've gotten over the last few weeks that have kind of given us some insights into the health of the labor market, how much do you think fixed income investors are going to read into whatever that report says tomorrow?
I think it matters a lot because of how Powell set us up at Jackson Hole of we are no longer willing to accept any further weakness in the labor market. So now it's just a matter of we know they will ease in September and how much do we get? I think when we look at this, do we get 25? Do we get 50? It's not about are we in a recession, because our belief is that the growth of the U.S. economy remains robust and this is okay slowing. It's more about we've been sufficiently restrictive. How much do we ease to get this cycle going?
What is the market position for in terms of that easing and more importantly, how fast we get that easing?
I think the focus is really on the unemployment rate for tomorrow. And certainly we have the Fed going into blackout later tomorrow.
Thank God. They talk a lot.
And we've added speakers. So we have
really do.
Williams and Goolsbee was added for tomorrow. So I think there's a lot of focus on all of this and what do we have for minutia. And I think it also matters what are we pricing going in. We've been sitting around this 34 basis points priced. I think either way, the Fed 25 or 50, that's a okay start. And I think the minutes, and again, Jackson Hole was an acknowledgement of maybe we should have started in July. We've been sufficiently restrictive. Let's begin this cycle.
So I was taking a look at WIRP, World Implied Probability, on the Bloomberg terminal, and we're looking at 240 basis points of cuts from now until the end of 2025. That's almost 10 cuts. That's a lot.
It's historically more than we've been able to price. It's a lot.
Right. So whether or not we start with 25 or 50, it's still a tremendous runway. Absolutely. Do you think we need that many? Are we going to get that many? And when do we get clarity on that?
Yeah, I think the market is balancing this. Do we get a mid-cycle adjustment, or do we need to go towards neutral? Our view is much more that this is a mid-cycle adjustment, and we have a lot of clarity through the end of 24. But into 25, we still have a presidential election. We have we have a debate next week that really the market hasn't focused a lot on because we're so focused on tomorrow. But that should give us a lot of clarity of what does policy mean looking forward, and giving us clarity that way.
So if the jobs market stays actually stronger than we think, AKA the numbers tomorrow, does that mean we push the cuts out, or do we reduce the amount of overall cuts?
I think in terms of what's priced through year end 24, this kind of 100-ish that we're pricing seems fairly reasonable, because we can have this mid-cycle adjustment. And beyond what we get for that, again, like our base case when we look at growth is this is a healthy slowing. We still have even today's ADP, which was weaker and the market reacted to, still 100,000 job creation. Claims have been very well behaved, right? Have this push and pull. And is this cycle different that you've had such immigration? Is that maybe the reason that you're seeing a tick up in the unemployment rate? Or we have different dynamics this time around?
I am curious, when you look at some of the moves that we've seen, particularly the last few days, kind of that disinversion of the 210s curve, and then, of course, it reinverted today. I think it's down about 2 points with a negative sign here. What am I supposed to read into that, if anything?
Yeah, so when we look at the curve, and when we look at developed market rates, the 10-year note in the U.S., and even in Europe, these longer end rates, we don't see a lot of value there, because the Fed can deliver an easing cycle. And for us, what feels wrong in the market is the inversion in the curve. So you could really have an easing from the Fed that steepens the curve, but just from repricing the front end, and that there's not a lot of value out there in the curve.
So is your position, though, that investors should stay more towards the short end of the curve for how long?
We think that there's value there, and there's probably value there for, again, when you look at 3.5% or 3.25% 10-year swaps, it's hard to argue there's a lot of value there unless you are looking for a recession. We go back to this, is neutral back to pre-COVID levels?
So, so if you can chase the bond bull in the 2-year, what's like a good rate to look at for when you would stop that trade? Like, how low do we go?
Look, I think if the Fed delivers the 200 basis points price, you still have another 50 basis points that you can go, 50 to 75, potentially how quickly you get there. And I think once we start this easing cycle, the market will say, okay, we've begun. This has been something that we've been waiting for 2 years, and reprice that into the front end.
How many rate cuts do you think it's going to take to get some of the money out of money market funds into other stuff?
I think it'll actually, the beginning of the cycle will really start to give investors the confidence of you move elsewhere in the market. I think the other thing when we look at it is a lot of it is an FX trade here. And you're starting to see, like, you can see a real period of dollar weakness going forward. And you also are back to, you have central bank divergence. You have the Bank of Japan, which can be hiking, although they seem timid about it. You have the RBA that still is thinking about, we're concerned about inflation. You have the Bank of Brazil, who has shifted and said we need to still be more concerned about inflation. So some of those divergences, I think, are important for currency markets going forward.
So this is not going to be sort of a unified type of cycle, rate cycle around the globe that I think investors.
I think there's a few standouts, and I think the Fed will will determine the tone for a lot of central banks, but there are some standouts that we have to be aware of.
Great stuff, Kristina. Great to have you. Kristina Campmany, Senior Portfolio Manager of the Global Debt Team over at Invesco, kicking us off to the close coming up here. It's a family affair. We're following fresh news about David Ellison's acquisition of Paramount and National Amusements, and the maybe not so surprising detail, Alex, of who will really control that company.
Oh yeah, plus Broadcom setting to report quarterly results after the bell, why tech bulls have their heart set on positive results that kind of turn back that AI trade.
And we're spanning the globe to bring you the thrill of victory and the agony of defeat, the wide world of the business of sports here. The Bloomberg Power Player Summit now taking place right here at Bloomberg headquarters, right upstairs. Conversations coming up in just a second. Drew Brees, Dan Hunt, Kevin Plank, and the babyface assassin, Steph Curry. Stick with us. This is The Close on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
It's from super hot to solid.
This is normal.
I think people underestimate the behavioral aspects when it comes to the labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
So what is bad on September 6th?
Nobody really has a full answer on it.
I don't know what counts as good news these days.
It's a big debate.
The August Jobs Report, Friday on Bloomberg.
Another development in that Paramount takeover saga. Stocks are pretty much flat on the day. This is on the news that software billionaire Larry Ellison will control the company once the group led by his son, David, completes its purchase of the Redstone family's interest in Paramount. Do you follow that? That's according to regulatory filing. Bloomberg's Chris Palmeri broke the story for us. Hey, Chris, is this a surprise? Like, how does this change the calculus?
Well, it's just interesting to see it in writing in a federal filing. I mean, this was always positioned as a takeover by David Ellison, Larry's son, who was the founder of Skydance, this film and TV studio, and he's going to be the chairman and CEO of Paramount when this deal closes. But you just assumed that being his dad, being one of the richest guys in the world, worth $150 billion, that's where the money was coming from. And this filing, which they were required to make to the Federal Communications Commission, says that indeed it's most of this money, the control of the company lies with a family trust. It's the Lawrence J. Ellison Trust, revocable trust, and he owns 100% of the vote and equity of the trust. So he essentially controls Paramount.
So, I mean, the thing that's interesting about it, though, I mean, is there any issue that investors might sort of bristle at this? Because there was a sense here that this whole deal was kind of unraveling this complicated family structure that Paramount and National Amusements had been in. And it sounds like we're just getting into another family structure, maybe not as complicated, but still a family business.
Exactly. Exactly. And while there's no indications that there's any squabbles between the Ellisons, I mean, there were fights in the Redstone family. It's quite dramatic ones. And at one point, Shari Redstone seemed to be the heir apparent. Then Sumner Redstone, her father, kicked her out. Then, of course, she ended up fighting her way back. We've seen similar, inter-family squabbles at the Murdochs and their media empire, the Dolanses and their cable TV empire. So, there is always one controlling person, and in this case, it's Larry.
So do we have any idea of what Paramount under Larry would actually look like?
You know, they've given an indication that it's going to be, much the same strategy the company had been pursuing. They're looking for partners in their streaming business. They're trying to cut costs. And they positioned this as David, having been a successful filmmaker, is going to revive that part of the business, which has been kind of a laggard.
So give us a sense here. I mean, I know that David himself will have operational control. Has he articulated anything since I think we last spoke about exactly how he's going to run this business? Sort of what is going to be the secret sauce that makes this a more viable business than what they were able to do under Shari Redstone?
Well, one is capital, which undeniably they're putting a lot of money in, over $8 billion in cash, plus the value of Skydance, and presumably with the pockets that Larry has, more if needed. Technology is something they've talked about, and again, that's where Larry comes in. Big software giant, and they can presumably harness a lot of tools there. But nothing dramatic yet in terms of David Ellison's plans.
All right, Chris Palmeri, our man there out there in Los Angeles. The latest developments right now in the whole Paramount National Amusement saga. Now learning here that Larry Ellison, the father of David Ellison, who of course sort of set out on this bid, will have full control of the company, at least on a voting basis. Coming up here after the break, we're going to look at the downpour of downgrades for discount retailer Dollar Tree and speak to one of the analysts that ditched his buy rating. That's coming up next in Top Calls. This is The Close on Bloomberg. All right, let's get a view from the sell side. Take a look at our top calls. These are the big movers on the back of analyst recommendations, and we start off today with Roku. Wells Fargo, which downgraded the stock to sell equivalent back in February on the risk from Walmart's Vizio deal, now reversing that decision with an upgrade to equal weight. The analyst Stephen Cahill praising the streaming platform's The Roku channel as a market share gainer in TV time, seeing the potential for strong revenue growth as it closes that monetization gap with platforms like Tubi. Those shares up about 4.5%. Next up, KB Home, down in the dumps, a downgrade to underperform. This over at RBC, the analyst citing pricing data showing the home builder is in for another month of weak trends that poses order risk and subdued relative gross margin performance. Those shares down 1.5%. And finally, we got to talk about Dollar Tree. A never-ending disappointment's continuing. At least that's the quote over at Loop Capital Markets, which downgraded the discount retailer to hold and slash its $170 price target down to $65. The analyst says he's doubtful that Dollar Tree's performance will improve anytime soon. And when it comes to disposing of that Family Dollar franchise, he says that's also unlikely. Those shares, though, rebounding a little bit at 6.66% here on the day. But of course, not enough to recoup that 20+% drop that we saw yesterday. Pleased to say that the analyst behind that call joins us right now, Anthony Chukumba, senior research analyst over at Loop Capital. So we do get a bit of a rebound here, a little dip buying, we should say, Anthony, in the shares. But I think the reaction said it all by investors here. Is there any hope that we can see a more meaningful rebound in this stock?
I don't really think so. I just don't know what the catalyst would be that would lead to a significant appreciation or re-rating of these shares. I mean, this really has been a dumpster fire for quite some time. I mean, every time they report earnings, it's like Groundhog's Day, right? They miss numbers, they lower their guidance. There's always some sort of strange, like one-time items in the numbers, but we're just not seeing it right now. And so we went to the sidelines. I mean, we definitely had to eat some humble pie on this one, but we really felt like we just didn't feel like getting cut by this falling knife any longer.
I mean, it's interesting. I mean, Anthony, in the media here, we kind of focus on Dollar Tree and for that matter, Dollar General as being sort of these barometers on the economy. But I think what we learned out of Dollar General earnings and then also Dollar Tree and then against the backdrop of what we heard out of Walmart, that it seems like what's ailing these dollar stores is much more specific to these companies rather than a broader read on the macro. Is that an accurate way to look at this?
I don't know if that's 100% accurate. In other words, I think there is something to be said for the difficult macroeconomic conditions that are really pressuring their core low-income customers. I mean, you've had this cumulative impact of over 3 years of elevated inflation, and we're definitely seeing it in both Dollar General and Dollar Tree's numbers. Now, having said that, they are also both dealing with some executional challenges, and certainly Walmart starting to kind of raise their game doesn't help on the margin. Mm-hmm. So I don't think you can just say it's it's 100% specific to the dollar stores. I do think that there are some macro headwinds as well.
Right, and you saw that even at Five Below, right? So it's like the super low end is getting super hurt. So where are those customers, though, going?
Well, I'm not sure exactly where they're going. I mean, it could be a variety of places. I mean, on the margin, maybe they're spending a little bit more at Walmart. Maybe, in the case of Five Below, which sells a lot of discretionary items, it's some of these, Asian-based competitors, whether it's a Temu or a Shine. Part of it is that they're just not necessarily spending on those discretionary items. And that's one thing that's really important here. If you look at the consumable business for a Dollar General, for a Dollar Tree. And when I say consumable, we're basically talking about, food, health and beauty care items, cleaning supplies. So think must-haves, not nice-to-haves. Those are actually pretty decent. It's much more discretionary items where they're struggling, and unfortunately, they make much higher profit margins on those discretionary items than they do on consumables.
Okay, that's a great distinction on that, actually. And also, if you get food at Walmart and fresh food, then maybe it's like one-stop shop kind of situation. So what do you think happens when the Fed cuts? Like, how many Fed cuts are we going to have to see for those consumers to get relief, to go back to kind of the Dollar Tree and Dollar Generals to buy those discretionary goods?
I'm not really sure if Fed cuts are going to move the needle a whole heck of a lot, for this low-income consumer. I mean, these folks don't really, for the most part, have credit cards. So, I mean, it can't hurt, I guess. It beats a sharp stick in the eye, but I'm not sure, the Fed suddenly starting to cut rates is going to be, enough for this low-income consumer to feel better about their position or have more money in their pocketbook to spend at these dollar stores.
So I'm curious about what the evolution then becomes of this. I mean, they're not just going to go away. I mean, there are still communities out there, I'm sure, as you know, Anthony, where this is one of their primary sources of, basic goods. And I'm just curious, is there any way that they can sort of find a broader niche here and sort of stake their claim to it without having to worry about Walmart or Costco or even Target, say, breathing down their shoulders?
Well, I 100% agree with you. I mean, these guys aren't going anywhere. I mean, these are large businesses, and they definitely feel a need in these communities. It's just more a question of, what is the earnings power, and it's clearly not as high as it once was. I mean, look, I'm not sure these guys need to necessarily reinvent themselves. I mean, I'm sure that there's some changes that they can be making on the margin, and both, Dollar General and Dollar Tree are doing some things on the margin. I think it's the question. I think the more important question is just, what is the long-term earnings power, and then from that, like, what multiples do you put on that earnings power? And right now, it looks like that earnings power is less than it has been historically. And if it is going to be less, then you probably have to put on a lower multiple, particularly given the fact that maybe they don't have as much growth potential as we once envisioned.
All right, Anthony, thanks a lot. We really appreciate it. We really appreciate all the sort of context there. Anthony Chukumba over at Loop Capital Markets. Don't want to stand under a falling knife anymore. I mean, that really says it all, and just how bad it's been for the dollar stores.
Yeah, and I mean, I thought this was like kind of their time to shine, right? I mean,
exactly.
You talk about a weaker consumer, you would think they would be gravitating there, but I think we've talked a lot about what ails them, not enough groceries, not enough discounting, believe it or not, or at least not enough relative to Walmart.
Well, I also thought it was interesting, too, that the basic stuff that you need is still doing well. It's everything else that is not. And then if you can get those things also at a Walmart or at an Amazon, and then you just get in bulk, isn't that a little bit easier, or even a Costco? And if it's just that specific in terms of on one-stop shop, and that's it.
Yeah, absolutely.
All right, well, coming up, we're about half an hour away and less than an hour away from Broadcom's results. It's going to be a key indicator of the state of the semiconductor industry. We're going to preview that. Will it be the bottom here for AI? Can you start building back some of those positions? And where does Broadcom kind of sit in that AI stack? We're going to break all that down for you coming up. This is The Close on Bloomberg.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Boston.
And I'm Alex Steele, and I appreciate we're waiting for the jobs number tomorrow. But Romaine, I got to say, some of the Mag 7 are doing pretty well. NVIDIA up by 0.8%. Bank of America says, look, buy the dip.
Yeah, and that's what we're seeing, right? I mean, like I said, if you want to stay invested in this market and you are concerned about some of these broader economic issues, where are you going to gravitate?
Right. And also, if you buy now, then you have a nice 17% slide in the last 6 days. Why not at the end of the day? It feels like that's what Bank of America is also saying. But we will get some direction when it comes to the AI story, when it comes to Broadcom. So shares are pretty much flat on the day. They're going to report quarterly results after the closing bells. And it's a key indicator for the state of the chips market and for AI and whether that boom can finally continue. Joining us now from Seoul, South Korea is Dan Ives, who apparently doesn't sleep, a senior analyst over at Wedbush Securities. Hey, Dan, just for Broadcom broadly, right? Last quarter, it said revenue from AI products reached a record of $3.1 billion, making up about a quarter of total sales. Do you expect that to continue to incrementally grow?
Yeah, that's going to ramp up. I mean, that eventually could be about 15 billion. I mean, when you look annually, look, this is actually an under the radar AI play that's starting to form. But as you talked about, it's putting pieces in the puzzle together. I expect strength in terms of what we're seeing broader AI revolution. Look, this is a second derivative AI play.
Right, that's a great point. So where in the stack does it sit? So in the beginning, I go to NVIDIA for the straight up chips, and then I go to Broadcom for something else?
Yeah, and then now when you actually think about as more where that data is actually going in terms of from an infrastructure perspective, that's where Broadcom plays. I mean, no different than where the hyperscale players play in terms of Microsoft, Google, Amazon, Broadcom. When you look from an infrastructure, they are going to be a major beneficiary. I think Hock has positioned them well to benefit here. And I think investors are still not really appreciating what sort of AI play that they could actually be.
So it gets to the broader question, though, Dan. I mean, I know this is kind of that longer term story. And of course, as we do on this show and as a lot of investors do, they tend to fret over the shorter term things here. How long do you think it will take before we get a little bit more clarity about the profit potential, the tangible profit potential of some of these AI rollouts?
I think by the end of this year. I actually think, look, we're starting to see use cases explode. When you look at names like Palantir, I'd say on the software side, names like ServiceNow and others, I think by the end of this year, we're actually going to start to see these use cases, even going into the December timeframe, into January, start to explode. What that means is the second, third, fourth derivative, that's where you're going to see the beneficiary. I continue to focus on, for every dollar spent on an NVIDIA chip, based on all of our research, $8 to $10 multiplier for the rest of tech. Wow. It speaks to you have $1 trillion of AI CapEx coming to the rest of tech, and that is not stopping. That's actually just starting, and that continues to be our bull thesis.
I also want to break this down, Dan, because there's, obviously kind of the corporate side of AI, what businesses are using this for, and the more consumer-facing side that most of us are familiar with, the chat GPTs. Apple has a big event planned for next week, largely to introduce some new iPhones that at some point this year will have the software capabilities to run certain types of AI programs. How much of a, tailwind can this be for AI adoption? Because a lot of people are saying that if you get a company like Apple that's able to convince its massive ecosystem of people to at least experiment with AI and then hopefully use it in a more meaningful way, that this could be kind of a more of a focal point, more of a big pivot in this space.
Yeah, look, I think that's a great, I view it's a historical moment, not just for Cupertino, but I think for the AI revolution. This is the consumer AI revolution now going through Apple. Where would AI be right now if Microsoft never actually went down the open AI path? It wouldn't be where it is today. You need the install bases and the stalwarts to go after. And now that consumer piece is going through Apple. And that's why I think next week it starts an AI-driven super cycle. Mm-hmm. And you're going to have 25% of the world, when they access AI, it's through an Apple device.
Well, but Dan, does that mean that having a diversified AI player is now the way to go versus like a straight up pure play like an NVIDIA? Because in some arguments, that's why Broadcom has lagged, because it is diversified.
Yeah, and that's really been our call to investors, is that you still own the godfather of AI, Jensen and NVIDIA, along with Microsoft. But now you look at the second, third, fourth derivatives. That's where Palantir plays, ServiceNow, Oracle. You look at Broadcom plays. I'd argue AMD, Lisa Su, in terms of how they're going to play. Even some of the cyber security players, that speaks to the revolution playing out. It's not just about NVIDIA.
Right.
Now we start to see that incremental spend. That's why we're bullish.
Well, and then that's also where the Apple story too, right? Because that's your thesis, even though they're diversified and even though there's going to be the China drag, the things that we all know.
Look, and for Apple, it comes down to it's about monetization. We think it adds $30 to $40 per share in terms of the AI story. The way that you get to a $4 trillion market cap, it's with AI. Were they first? No. But you're talking about an install base that's unmatched, and betting against Cupertino and Cook into an AI-driven super cycle, and that's a bad bet. Again, it's like going up against Taylor Fritz in U.S. Open.
Okay, I love the reference there, Dan. Way to stay relevant. I do want to just make a quick pivot here and ask you about kind of the role of Tesla. I mean, there's been a lot of talk, of course, about not just the issues it's having as a company, but also the broader EV space. But also there was this idea that Tesla as a company was much bigger than just about EVs. It was about energy. It was about AI, if you will, and automation as well. Where do they fit into this ecosystem?
I think Tesla is the most undervalued AI play in the market. Now, next month, Robotaxi Day. That's going to start the next phase of the Tesla growth story. Now, look, they're in between two growth waves. They've had headwinds from a demand perspective. But the Tesla story, it's about autonomous FSD. That's the golden goose. That's what they're going after. And I continue to view them more as a disruptive robotics AI play rather than just a traditional automotive company. I think that will be a huge sort of moment for Musk and Tesla, October 10th.
Dan, always great to talk to you and appreciate you staying up late or getting up early. We don't quite know how long you've been up here, but thanks for joining us there from the other side of the world. Dan Ives, one of the hardest working people out there, of course, analyst over at Wedbush. Coming up here, we're going to talk about the largest U.S. phone company snapping up the largest pure play fiber internet provider in an all cash transaction. We're going to have the details of the Verizon Frontier deal. It's our stock of the hour, and it's up next. This is The Close on Bloomberg.
Right. And happening in our headquarters right now in New York City, Bloomberg Power Players, where we gather industry leaders, investors, and athletes who are revolutionizing the business of sports. You got right now Steve Pelugia, a co-owner of the Boston Celtics, discussing what it's like owning an NBA championship team. You can tune into the panels on LiveGo on the Bloomberg terminal or stream it on Bloomberg.com. This is Bloomberg.com Now, a panel focusing on the future of women's soccer.
You don't really own these teams. They're kind of owned by the city, and they can do an enormous amount of good. So we set up, the first day, we set up something called the Boston Celtics Shamrock Foundation. And you can't win a championship every year.
This is very straight into our core strategy. We are sort of in mobility and broadband, serve basically all types of customers in this market, consumer, SMBs, large enterprise and governments. This is just extending the offerings and optionality for the customers we have. So this is a really good decision by us to do it.
All right, that was Verizon CEO Hans Vestberg discussing the company's planned acquisition of rival telecommunications operator Frontier Communications. Those shares right now, at least on Frontier, down about 9% here on the day, but we should point out they rallied almost 40% yesterday here. Verizon acquiring the company for about $9.6 billion, expanding its high-speed internet business, assuming this thing goes through. Abigail Doolittle joining us right now for our stock of the hour. Ignore the share price move today, because obviously that's a little bit of, I guess, profit taking from yesterday here. This seems like it could potentially be a good deal for Verizon, but how are investors really feeling about it?
I think that it is actually a good deal, and this space is not my area of expertise, but it really does broaden their footprint, so to speak. So right now they have 7.4 million subscribers. They have 16 to 17 million locations available for their broadband, but they're in a very limited number of states, and to expand into other states, it's very costly, and it also, there's a lot of legal process involved in it, and it would take a lot of time. Whereas now with Frontier, they all of a sudden have more than 10 million subscribers. They're in 31 states, and all of that done for them. Now, the share price thing, it's actually sort of interesting. I love what you're saying about the fact that it was up a lot yesterday on that Wall Street Journal. But if you take the close from Tuesday to today, it's still up only 24%, which is a ton. But it should be up 37%, which points to the
skepticism.
Around the antitrust environment. But plus, they're talking about an 18-month timeline. I mean, a lot could happen.
18 months?
18 months.
In this economy?
And then the other thing is,
do we know why it's so long? Is that an election overhang?
we don't know. And so that, I think, is one reason why we're not at that full premium. So there's basically a 10 to 12% gap between the price surge that we have today and where it should be if investors were fully appreciating that price. So it could be FTC, it could be just timeline. Think about the other Frontier, though. They were supposed to be acquired, and
what's
by
the other Frontier?
By JetBlue.
Okay. I didn't know where you were going with this conversation. I was like, there's another Frontier Communications?
Well, I mean, but that deal really fell apart over time. And so I think that's kind of why there's this not being fully valued.
Nice segue.
What are the naysayers saying about this? Like Gene Munster
so some are saying
positive on this.
So again, I'm not an expert on this space, but just from a logic standpoint, he's saying, well, this deal doesn't make that much sense because they need a national footprint. this doesn't give that them. Well, there isn't anybody they could buy except for AT&T that would give them the national footprint. So unless Verizon and AT&T were to combine, and I don't think the FTC or the DOJ is going to allow that to happen, 31 states is a lot better than just a handful. Right now, they're in 8 or 9 states. So again, I'm not an expert, but I think some people are saying that if they had built it out their own, doing that time-consuming process, legal consuming process, it may have cost them less. But on the other hand, maybe you pay that premium just so you don't have to do all of that work and you just have it handed to you. Well, 18 months out.
Yeah. Do you know anything about Frontier Energy?
I don't know. There's another. Okay.
Yeah.
That's it. That'll be there.
What are you just looking at, like frontier companies?
Pretty much.
Look at Alex. She's busy on the front. She's like, I can tell you about Frontier Energy.
Yeah.
I think it's an Australian company.
It is Australian. Look at this. The commodities.
Yeah,
maybe some copper in there.
It's Australian. No, it's Canadian, isn't it?
Yeah.
Canadian.
Anyway.
It's fine. This is a good talk.
I love it when you two indulge me, even though you really shouldn't. I'm sure our producers are going crazy right now. All right, well, this is our stock of the hour. Frontier down 9%, Verizon down marginally here on the day.
Yeah, and you look at the markets just trading a little heavy. We're looking at like a little bit of downdraft into the close.
But there is only one Verizon.
Did you actually confirm that?
Not yet.
Okay. So you never know. I mean, just saying. Looking at S&P, now down by about 0.4%. The Dow's off 0.6, and the Nasdaq is pretty much flat. Volume isn't terrible, but, it's going to be all about tomorrow at 8:31 at the end of the day.
Absolutely.
And Verizon, apparently. All right, we're counting you down to the closing bells with Katrina Dudley, portfolio manager and senior investment strategist over at Franklin Mutual. She'll be joining us as we kick off into the close. This is the close on Bloomberg.
For us, what feels wrong in the market is the inversion in the curve. So you could really have an easing from the Fed that steepens the curve, but just from repricing the front end, and that there's not a lot of value out there.
All right, that was Kristina Campmany, Senior Portfolio Manager of the Global Debt Team over at Invesco. She kicked off the show with us here on The Close. Romaine Bostick alongside Alex Steele. And interesting, she makes this comment just as we're getting a headline across the wire, the latest ICI data on money market funds. Stop me if you heard this before. Another record.
Oh, my goodness.
Everyone's staying in the short end of the curve.
So what's it going to take for that money to come out? How many cuts do we have to see?
Yeah.
One cut ain't going to do it at the end of the day.
25 basis points ain't going to do it
No.
here. Yeah, and that's the setup for tomorrow, right?
It is. You're taking a look at the S&P just off by about 0.5%. So picking up a little bit of downside into the close. Consumer discretionary, though, outperforming. And the why behind that is Tesla doing really well. NVIDIA also getting a little bit of a bid. Bank of America says buy the dip there. Tesla also have its best intraday since about late July. It's going to launch some full driving self-technology in China, Europe, all that cool stuff.
Oh, yeah, I can't wait for that here. Looking at the yields slightly down here on the day. The VIX actually tamed, at least for now, right around 20. The big setup, the big march, the big drumbeat to that 8:30 a.m. report out of Washington. U.S. monthly jobs. Katrina Dudley, portfolio manager and senior investment strategist at Franklin Mutual Series, joining us here in Studio 2. And let's just talk about it. Get a big jobs report tomorrow. I'm not sure how much we need to react to it, but I guess the market is going to react to it. What are they positioning for right now? Is this going to be a ratification of all these rate cuts that have been priced in, or something else?
Okay, so you have to first, what is big? Is it just big because it's such an event, given the last time we had some jobs data, there was just such a significant revision. I think it was the biggest revision in 15 years. If I look at consensus, it's 165. If we look at some of them, now casting forecasts, it's actually looking for over 200. So I think if you get a print that's in that 165 to 200, the market's going to be fine. The bond market, however, is actually pricing in 2 cuts, not just 25, it's pricing in 50 cuts, as we kind of see it as more than just one. And I think that's where that strong data is going to temper that enthusiasm for such a large rate cut. I think that the Fed wants to keep a little dry powder.
Is the market pricing, and forgive me if this is a completely dumb question, but are they pricing in rate cuts or are they pricing in a softer economy?
I think in terms of the rate cuts and the soft economy, both of them are interlinked. If we have a rate cutting environment that is just kind of a little bit of an adjustment, that maybe we tighten too much and we just need maybe 25, 50 to get to rates kind of that Goldilocks just right, that's okay. That supports a soft landing. But if people start to fear that we're cutting rates in response to an imminent recession, that's the bear case on the market. So I think it really depends on how people interpret these cuts in their thesis.
Which, if then the jobs number is weaker than that 165, how much weaker then becomes really bad news, a la what we saw in August?
I think what I would say is a weaker number is something around the 125, something under the 165 consensus, not quite the 114 that we had last month. People are looking for people to be employed because it's just a really good sign. We talk about some of the traditional economic indicators. I look at things like a Dollar Tree, and unfortunately, some of those indicators that we have are not giving indications as we normally would expect because there's other trends going on. We've got Walmart competing with Dollar Tree in their backyard. So we're also looking at the jobs data to give us a bit of more of an indicator as to how that lower end consumer is doing.
But you think the action tomorrow will be in the bond market, the FX market, or the stock market?
I think it'll be the equity market, because the equity market is really the discounting mechanism. And if we look at valuations, we look at them with the Magnificent Seven, we look at them without. It's a little bit on the expensive side. So if we start to see that jobs number, coming in very weak, I think we're going to start getting more of those bear market commentaries that says we're going for a recession.
Does that also sort of split up the sort of, I guess, broadening trade that we were talked about? We had seen kind of the S&P equal weighted index, at least if not outperform, certainly start to keep pace with the SPX. And even, of course, for a short period of time, we saw the Russell and some of those other small and mid-cap stocks also outperform.
I think that's exactly the case because those smaller companies tend to be a little more exposed to economic trends. They don't have that portfolio that the larger companies have. So I think your analysis is right on point that any type of imminent recession is first going to be felt in those smaller cap companies. They usually fall off in the beginning, but then they are really good stocks to own if you can time them right.
This gets to a question, too, about whether the market should wait to react, because we do have a Fed meeting coming up in basically less than 2 weeks, or a Fed decision coming up in 2 weeks here. So no matter what that says on Friday with this jobs report, we still need to hear from Jay Powell and what he thinks of it before we...
She's laughing at you right now.
I know.
I'm not laughing.
Yeah. She's laughing with
they're not going to tell you anything ahead of that meeting. I think they go into blackout period over the weekend. So you've got nothing to do. So if you're waiting on that, first of all. Number two, you do have the CPI print that's going to happen next week. So you do want to pay attention to it to make sure that we continue to be on trend. So I think that should you wait, though, until the Fed actually announces? What happens if the Fed does nothing? I mean, no one seems to be contemplating that. The consensus is they're going to cut 25 or 50. But what if they say, look, the jobs number is still very supportive. Inflation is coming down to trend. It's slower as it comes down to trend, but it is on trend. The GDP number was just revised up slightly. Things are okay, so maybe we'll just wait again. And that's the type of commentary that we think really supports a steady landing. But I'm not necessarily sure that investors are prepared for something like that.
When you take a look at the bull market in bonds, is that played out no matter kind of what number we get tomorrow?
It's really tough to see if something's played out completely in terms of a bull market expectation. But I do think that we are overly focused on this one number, and that does worry me when the market tends to be myopically focused on just the number of jobs that we're going to add, particularly in this environment where we're just seeing such revision to these numbers. And I think that the reliability of it is a little more tenuous.
Well, especially if we come in bang in line with estimates, what are the chances tomorrow is actually a complete snoozer? And that we're all here to be like, well, that didn't do anything to market expectations.
And so what do you do? Then you're like, well, next week there's a CPI print, so we're going to focus on that. And they're the things that we are looking at.
All right, Katrina, great stuff, and great to have you here in the studio. Katrina Dudley, she's portfolio manager and senior investment strategist at Franklin Mutual Series, helping us count you down to those close. Just about 3 minutes to go here. Another mixed day here for stocks, Alex. The NASDAQ composite clinging to some modest gains here, but you're seeing modest losses across the board. So more significant losses, though, in the Russell, the S&P 400 mid-caps, and Dow Transport's down 2%.
Yeah, that's interesting. The real economy stuff, which is what we've been talking about when it came to oil for earlier this week as well. Still pointing to Citi options looking $110 10 basis point move to the upper downside tomorrow for the S&P on the jobs number.
Absolutely. The VIX, at least for right now, somewhat tamed right around that 20 level. And you talk about where rates, Alex, maybe could potentially go. I take a look at a benchmark 10-year at 3.7, and that 2-year, if you want to go for the 2-year, 3.7 as well. Basically about the same. Okay. Is that going to shift a lot tomorrow?
I have no idea. I genuinely have no idea. Like, what's that? I mean, so much is priced into that front end. Yeah. Like, how much more can be priced in at this point? Absolutely here. And of course, we could see some potential moves in the dollar. We're going to break down all of the market action in just a second. Coming up right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you to the Closing Bell, a global simulcast. It starts right now, joined in the television studio by Scarlett Fu, Tim Stenovic in the radio booth alongside Emily Grafeo. Carol Masser has the day off. We welcome our audiences across all of our Bloomberg platforms here on a big Friday Jobs Eve.
Yeah, I think that's a good way to describe it. That's the big thing that matters. We just spoke to Jason Britton.
I don't know. I was working on that too.
I didn't get a lot of sleep last night. I was in Korea all night.
The suspense is there. The suspense is there. Don't worry. Mike McKee told us this is the most important payrolls report.
Oh gosh.
Since the last payrolls report.
It's going to be a snoozer. That means we're going to see.
It's not going to be how can it be a snoozer?
Nothing in bond yields. Okay, well, here, the number is 165K jobs added. So if it comes in line, then, I mean, we typically wouldn't see the market move. So we'll
but you know what? We'll just lurch forward and hyper-fixate on the next big data point.
Yes.
It'll be CPI next week, right?
That's what we do.
Yeah, well, there's always something to anticipate.
Well, and then to that point, 22V Research, polled in a survey, said that 44% of investors think the reaction to Friday's job will be risk on, but you have 27% risk off and 29% mixed. I don't know what that means. That's like a coin
flip.
Shrug. Yeah.
Yeah, and when you talk about the actual data itself, I mean, we're talking about economist estimates that are right around that 165,000 level, and I kind of wonder what actually constitutes really a beat or miss. I mean, when you look at it on a 3-month rolling basis, we're pretty much in line with historical averages and pretty much in line with what a lot of economists said they're comfortable with. So it'll be an interesting day tomorrow. That comes out 8:30 a.m. tomorrow out of Washington. Meanwhile, at 4 p.m. here in New York, you get the closing bells with the Dow Jones Industrial Average and the S&P looking like they're going to close out the day in the red. The Dow down about 0.5%, roughly 200 points. The S&P down 0.3%, roughly 17 points. The Nasdaq Composite, though, inching out a gain on the day, roughly about 0.25%. Meanwhile, the Russell 2000, S&P 400 mid-caps, and Dow Transports all significantly lower on the day.
We did see more stocks in the S&P 500 move lower than stocks move higher. 373 decliners in the S&P 500, 126 stocks did move higher in the S&P 500, Scarlett.
All right, no one wants to get out too far ahead of the big jobs report. Let's take a look at the IMAP, which shows which sectors are in the green, which sectors are lagging behind. Let's start with the advancers. Consumer discretionary, and that's really on Tesla and Amazon, gaining 1.4% on the day. Communication services up 0.5%, and tech is basically unchanged at this point. You do see pockets of green there within the tech sector. Well, in terms of decliners, healthcare and industrials and in financials, each losing at least 1% on the day.
All right. Well, you mentioned my first gainer there, Scarlett. A nice little preview for what did move higher, starting with shares of Tesla up close to 5%, 4.9%, the highest intraday going all the way back to July. It did say that it plans to launch its full self-driving tech in China and Europe in the first quarter of next year. Separately, Adam Jonas over at Morgan Stanley had a note out that highlighted Tesla's underperformance versus other tech megacaps and suggested keeping near-term expectations regarding the firm's robotaxi, quote, well managed. Remember that robotaxi is set to be unveiled at an event next month. It was supposed to be unveiled back in August, but October 10th is the date that they're targeting now. Let's go to the skies for the next stock that moved higher, JetBlue Airways. The shares jumped after the company boosted its revenue forecast for the third quarter. Look at that, higher by more than 7% today. JetBlue said it actually benefited from rebooking passengers from rival airlines whose flights were disrupted by that tech outage in July. Remember, it was that software update from CrowdStrike that upended multiple industries. Over a few days in July, it forced airlines to cancel thousands of flights. Delta was affected the worst. Some carriers, though, largely sidestepped the problems due to their use of other systems. And finally, one of the most actively traded stocks today was Applied Digital. They do data centers. APLD is the ticker. Shares surged more than 65%. The company entered into definitive agreements for a $160 million private placement financing period from a group of institutional and accredited investors, including NVIDIA. Still down a little more than 20% so far this year, though, Emily.
All right, well, I'm looking at the decliners. First, watching Old Dominion Freight Line, those shares sliding as much as 7.2%, but paring back some of the loss to finish the day around 5%. This is after the company said that less than truckload tons per day, that is the metric that these trucking companies use, it fell in August, or it fell 6.1% from the prior year period. A lot of trading in the put options. Those are bearish options. We saw that volume more than triple the average today. So more investors piling in on the bearish options bet for that trucking company. I'm also looking at Frontier because that stock, if you guys remember, surged 37% yesterday after the news that Verizon was in talks to buy that communications company. Today, paring back that gain. So now the share's falling about 9%, but still up higher after that news. And this came after we saw today, Verizon said Frontier's investors will get $38.50 a share, a 37% premium to the closing price on Tuesday. Finally, I'm looking at ChargePoint Holdings. This is an EV charging solutions company. Those shares down as much as 23% on Thursday, paring back some of that loss, but not much. This was the most intraday drop since November after the company's revenue forecast for the third quarter missed estimates, and the firm announced that it plans to cut 15% of its workforce. Some analysts downgraded the stock, citing an unclear path to revenue growth and an EV recession.
Ooh. Well, that's not very good. I mean, if you don't have the charging stations, then how do you buy an EV? And that can be stressful if you are a car buyer. All right, I'm looking at the bond market here. Yep, the bond bull continues to reign, particularly in the back end. You have the 2-year flat, and you have the 10-year just down by about 2-3 basis points here. Basically a parity for the 210s. But the volatility is definitely picking up within the bond market, all set up for Jobs Friday.
All right, well, we got to go. We're too excited for Jobs Friday to stick around. We don't even have time to hang out with you guys anymore. Emily and I are heading back to radio and YouTube. Alex, you're heading out. Scarlett and Romaine, you're going to continue on TV. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll be back tomorrow, same time, same place.
All right, now that markets are closed, we want to take you to what's happening right now in New York at our world headquarters, Bloomberg Power Players, where we gather industry leaders, investors, and athletes revolutionizing the business of sports. We've had conversations with names like Grant Hill, Cal Ripken Jr., the NWSL Commissioner Jessica Berman, and now we're going over to a conversation with NBA All-Star and recent Olympic gold medalist Steph Curry, as well as Kevin Plank, the founder and CEO of Under Armour. Let's join Vanessa Perdomo with them.
You know, the Olympics for the first time. Talk to me about how that fits into the Olympic strategy.
Well, I think authenticity. You know, Under Armour as a whole, we had 72 athletes, 26 countries, ended with 28 medals. You know, this is 28 right here. I think the last one that came home.
Kelsey Plum?
Kelsey Plum won another one as well. So, I mean, this is where we want to be there for sports. So Under Armour is meant to be, you know, one of the very few global brands that can show up in any athletic endeavor, on every court, any pitch, any field, and be seen as credible. And that's something that we refer to as, we're a podium brand. We call ourselves a sports house. So we want to be in those moments, and we want to be outfitting athletes where it matters. And so, you know, we were founded on field in the sport of football. And so football making a debut in LA is going to be super cool. It is going to be a really neat opportunity for us, especially as we look at in 28 of, you know, that'll be the first year we'll be outfitting the flag football team there. So we'll see what kind of athletes, and we'll see who's going to be throwing the rock. But
we will definitely see that.
Have you ever played flag football?
I had. I'm watching my 6-year-old play now, so I think
you could use another one.
There you go. 10-year-old flag football, 2028, maybe. You know, Steph, you both had talked about it there, the global outreach of the Olympics. And, you know, you've obviously been on the winning train before in the NBA. Does this feel different in when you're talking about the way that this impacts global business?
For sure. There's no bigger international stage than what we just experienced. Starting with being on the barge and opening ceremonies with all 590 plus, you know, Team USA athletes across all the different sports, events, skills. And, just being in that environment, for me, I felt it. Like, I was a kid in the candy store taking pictures with everybody. Everyone would take pictures with us. And I'm like, make sure you introduce who you are, because I want to know. I want to educate myself.
What sport they were and all that.
And you feel like, how much passion there was from fan bases everywhere. And, the amount of reaction I got from that gold medal game and just what we were able to accomplish, how I played, that obviously is something I'll be talked about for a long time, but it drives exactly what Kevin was talking about, the things that kind of have to go right for it to happen, from, my product all the way to being able to celebrate it in different parts of the world. So it's definitely amazing, and I think we're going to capitalize off that momentum.
And that goes into the tour that you're talking about. Is it a global tour for the next few sneakers? Is that what you're talking about, Kevin?
It'll be the first time Steph will be over in Asia, doing a 4-cities tour there, starting in Chengdu, and we've got a colorway called the Pandu that's going to be dropping then as well, which is, Chengdu is where the pandas are in China. So it's going to be really exciting. The product will be terrific, but the way that Stefan's sort of received there is, it's like nothing I've ever seen before. It's been 5 years since we've been over to China as well. We've got a pretty big store base there, so it's something that the market's incredibly excited. I think the first day there, we had how many signups? I think, several million social media signups of people that are popping on Tencent, who's going to be one of our partners for the tour. But we'll be there. We'll meet you in Shanghai and see. And I mean, I remember we've done this before. And you got to remember, you're on a tour. It's like it's 24 hours a day. But what was that big mall we were in? We put you up against like some 6-year-old kid. Oh, yeah, and for whatever reason, Stephen woke up. And if you've ever seen Stephen Curry, I've never seen Stephen Curry not make basketball shots. It happens. So anyway, we'll make sure we get you sleep.
That part.
So you were a little jet lagged then?
Just a little bit. You're trying to obviously balance the work and the reason we're over there. Obviously, I'm still prepping for the next NBA season coming up at the end of the month. So, trying to do it all, obviously, and take advantage of this window of time to be, like you said, it's been 5 years since we've been over there. And, this is international work we're trying to do, so I'm excited about it.
Yeah, absolutely. Kevin, one of the things, I want to talk to you about as we talk about strategy and moving forward is you took a seat back from being CEO, and now you're back. Why was it important for you to step back in this role?
I mean, that's something which, we say at Under Armour, there's 4 things that make up our brand. Is number 1, we're about athletes. Number 2, we're about sports. Number 3, we're about innovation. Number 4, passion. And hopefully we can wrap some smarts and some strategy around that. And that's one thing which we've got a really incredible team. And what I'm watching being built in Baltimore right now is really special with the people side of it, but also, in the physical infrastructure too. We've got a new headquarters that's opening, in a town like Baltimore this November. 300,000 square foot. It'll be a LEED certified building. It'll be a new house to sort of contain it. It feels like we're starting a brand new chapter at UA. So the ability to come back and lead that is something, what a gift. Gratitude is something I've learned is, turning 52, and I feel like I've lived several chapters at this point and got some dog years on me. So hopefully we can apply all that wisdom and smarts and again, some of the great relationships that we have too, when you have, talent like Stephen and someone who's inspirational that can speak to the living, physical, walking manifestation of what it means to be the underdog, to have that, they didn't pick me, they didn't give me that chance. Hey, Virginia Tech. I mean, so it's like, and this is the things where Stephen is that underdog. And to know that, you can apply that rule of 10,000 hours. It's something that's very Under Armour. It speaks to the kid and the consumer, which is a lane that we think, Under Armour is that chip on the shoulder. We represent grit. It's from our hometown of Baltimore to the attitude we have when Stephen plays. So that's something that makes us really proud, and we're happy to go tell that story and inspire young kids all over the world.
Yeah, absolutely. So that new headquarters and moving forward with athlete relationships, is that those things that you're really looking forward to stepping back into the role?
I mean, look, new headquarters don't sell shirts and shoes, so that takes people.
Right.
And that takes thoughtfulness, it takes strategy, it takes teamwork. Culture is probably one of the most important things that we drive, and it's where I'm really focused right now, is building a culture at Under Armour, which, of course, it embodies, the idea of winning, which is something Stephen brings, but it also embodies you're not going to win all the time. And so when you get kicked, let's make sure we teach them how to get back up again. And if we're going to stand for somebody, Under Armour's not old money. There's people who've been doing this longer than we have. But, we've put ourselves on the stage, we're in a position, and, we're in the fight.
Steph, when you come back together now, you've been partners in this business for a long time, and you're moving Curry brand forward. How do you envision this relationship going forward, especially, past your playing career and beyond?
Yeah, if you look at from 2013, when I had my first meeting in Charlotte, with the Under Armour team, like the vision was to build something unique and special to kind of reflect what I wanted in the basketball space. Under Armour basketball was babies at the time, and there's kind of just a white canvas of what do you want to build, and built off my signature journey over the course of the first 8 years, Curry brand launching in 2021, and then thinking about, okay, to your point, what is the legacy of this opportunity to, we call it change the game for good, and everything he just mentioned about, product and innovation being the driving force of that. I want to bring people along, the ride with me, and so obviously signing De'Aaron Fox last year was a big deal, especially as an active athlete, to have somebody that sees the same vision I have as an underdog who's trying to prove himself and take that next step, and he wants his a product to do exactly what he needs to do to be the greatest basketball player he can be, but also has a vision of what he wants to do in the community as well. For me, that's a huge, huge deal. So, that is the hopefully sustainable, place of like, how do we build this roster out? How do we expand in different sports? But go deeper into the innovation that we do best. Like, obviously I'm up here. You see he's got the shoes on. Like, I'm in this thing. I'm a part of the design and the evolution of the line, and I'm excited that this is something that we can continue even after I'm done playing basketball.
I didn't get a pair, but
I don't know. We didn't have nothing to go with the rest of the outfit, so we'll figure it out.
We'll work on a scholarship.
Get that WNBA colorway going, you know what I'm saying?
That's it.
When you're looking at expanding the brand, you did talk about, going into other sports, and you obviously have the golf apparel, and you've gone into that a lot, and you have the underrated golf tournament. The Curry Cup just happened,
Just
right?
Yesterday over at Ridgewood Country Club in Paramus. Yeah, we have the underrated golf tour where we bring equity access and opportunity through the game of golf. This is our third full season. We have all expense paid experiences for kids to drive diversity through the game of golf. And so, yeah, it's special. They're out there rocking the fire gear. They're unbelievably talented kids, both on the men's and women's side. So, my presence in the golf space, for me, that's a passion, and I know how much that can create opportunity and be the golf could be the vehicle for change for these kids. It's pretty special.
Yeah.
And that's our job, is to make sure, like, to give Stephen some of that outlet too. So, long after he's done making his last three, there's an opportunity for Stephen, number one, to keep inspiring young kids, opening up opportunities and inclusion, especially places like what it means for golf. But as that relates to the business side, from a product standpoint, we're thrilled to be able to have Steph's, mind and thinking. And the latest deal that we did makes Stephen a long-term partner and shareholder of UA. And so I wouldn't bet against this guy. And so I'm always careful as a public company CEO of what guarantees you can make. But there's one thing I know, is that Stephen Curry's going to win. And so to have him leading on behalf of the UA brand, style, product, relationships, culture, understanding, in the sport of basketball, because that's one place where, we want to win. And we think that there is an opportunity, and that comes down to great product. But, Stephen mentions the personalities, but he's the one that's selecting De'Aaron. He's making sure, does it line up with my values? Does it line up with integrity? And this isn't saying, who wants to sign with us? It's very intentional and being really thoughtful about the athletes that sort of meet that Stephen Curry criteria.
Absolutely.
Yeah, absolutely. I'd love to pick your brain a little bit more about that. When you're thinking of bringing De'Aaron in, and you're thinking of signing NIL players, how do you select them? What are those conversations that you have with them to see the vision, or make sure that they see your vision too?
Yeah, it happens. Well, first off, you see them in their talent. There's something you see about certain guys and girls where you're like, are you competitive? Are you focused on your craft to the level where you expect greatness from yourself? Do you put the time in? And is that an authentic thing that you kind of express on a daily basis? First and foremost, family is important for me, and just the way that you see your place. I have a strong sense of purpose when it comes to why I feel like I'm on this stage, and why God's blessed me with these skills to go out here and play basketball at the highest level. And can you inspire the next generation to do the same thing, to find what's great about them, to speak life into them? And, everything that we do is connected to that mission. So I'm excited that one, people resonate with me when I say that, and two, that De'Aaron has a choice. Like there's so many, not all shade, or is it money? It's not all the same shade of green. And when it comes to like, we want to be competitive in that space, but there's also that alignment on, do you see a purpose of how you can leverage your career to do other great things, not just now but in the long term as well. So he's checked all those boxes. And I think the future is bright for him. AZ Fudd, Malaysia Fulwiley, high school, going into their college careers, finding ways to do the same thing on that stage. So
Tommy Yoga?
Yes,
Yeah.
that's right. So we're doing internationally as well. So to your question, like just want to have those authentic expressions of exactly. I don't want you to be me. I don't want you to do things the exact same way I do. I want you to take the inspiration of. What does it mean when somebody looks at you and how you handle yourself and do it in your own unique way? And I want to be able to pass the baton like that.
Absolutely. That was incredible. And we were talking about Malaysia and signing her, South Carolina, and then they go win a national championship. Kevin, when you look at that space and you look at NIL and you look at women's basketball and the growth that's happening right there, right now, what's going on in that space and what can you guys help build in that space?
I think the position, what Stephen has created, in basketball as a whole, but what it means and what you're seeing the rise, I think, in the women's game too. We're thrilled. We've been, we're 3 years with Kelsey Plum, amongst athletes we've had, some of the NIL deals we've done, our relationship with Dawn Staley and the South Carolina Gamecocks, the dominance that they've shown as well. So, we're in this game, we're competing, we're winning championships, whether it's NBA championships or NCAA ones. So I think that we've got, NIL is complicated, but it actually, I think it's beneficial to us too. The deals are shorter. The athletes are authentic. Like they love it, they believe it, and frankly, every one of them doesn't say, "Yeah, I'll sign with you," but I want to have my own brand like Curry. Like that's where it gets hard. It's like we need to go sell some UA. And so those things, it gets really complicated quickly. So, but it's a place that I think it's an evolving landscape, but one that we're lucky and happy to participate. I mean. It's such a privilege to be able to work in sports. It's something we tell our team is that, who's got it better than us? Nobody.
I loved Kelsey Plum. You guys just dropped her birthday shoes.
Okay, you've been listening to 10-time NBA All-Star Steph Curry and Kevin Plank, the founder and CEO of Under Armour, along with Bloomberg's Vanessa Perdomo at the Bloomberg Power Players Conference in New York. You can check out the rest of that conversation on LiveGo on your terminal. Meantime, we do have earnings, and it's a big one when it comes to the AI space. Broadcom reporting results for the quarter that ended, and we're talking here about third quarter. EPS of $1.24, beating the consensus estimates by 2 cents. Revenue coming in slightly higher than anticipated as well, $13.07 billion. But it is the outlook that does fall short. Revenue this quarter will be about $14 billion, missing the estimate of $14.13 billion, even as the company has said that it is essentially raising its full-year sales forecast for AI-related products to $12 billion from $11 billion. That's not having too much of an effect because the immediate fourth quarter outlook for revenue is lighter than anticipated. The stock declining about 4% in after-hours trading. Broadcom, of course, makes the products that connects the data centers after the first wave of spending on things like chips and servers. Romain?
All right, we're counting down, of course, to what could be the main event of the weekend. That is the U.S. payrolls report due out tomorrow. Consensus estimates in a Bloomberg survey, 165,000 jobs. While that would be an improvement over that disappointment that we had a month earlier here, it does indicate that maybe, just indeed, there is still some softening or deterioration in the U.S. labor market. Louise Sheiner is joining us right now of the Brookings Institution, a long career in Washington, of course, at the Treasury, at the Fed, and of course, also on the advisory committee for the Bureau of Economic Analysis. Louise, great to have you back on the program here. There's a lot of discussion here about, I guess, the softness in labor market data and whether this is just kind of a course correction, kind of that sort of return to the mean, if you will, or if this is a meaningful deterioration in the health of our job market. How do you see it?
Yeah, thank you for having me. I think that's exactly the right question. I don't think we know yet, and that's why I think there'll be a lot of attention paid to tomorrow's employment report. We have definitely seen a cooling in the labor market. And I would say that the labor market, by pretty much every measure, is a bit weaker than it was during the pandemic. And that's like the first, we haven't been able to say that for quite a while when we've had such a strong labor market. So it's definitely cooled. The Fed does not want to see any more deterioration. And so the question is whether or not we've sort of gotten this unemployment rate up a little, but it will stick here, or whether or not this is the beginning of sort of more deterioration than the Fed wants. And I think tomorrow's report will be very helpful in that regard to know what's going on.
So obviously, you have a different approach to looking at this report than a lot of our viewers who, of course, are investors, traders, if you will. For those folks out there, and you speak to them, what is sort of the main element that they should look for in the report tomorrow? Is it that headline number or something else beneath the hood?
I actually think that the unemployment rate is particularly important. So I would look at that unemployment rate. As you showed, the market's expected to tick down a little bit from 4.3 to 4.2, because we think that some of the weakness that we saw for July was about auto workers, auto plants retooling and some weather, maybe the hurricane, maybe just the heat. So if that's the case and it ticks down to 4.2, then I think we'll feel like, well, it's no reason to panic. It's ticked back down. And maybe we're really having that nice soft landing where we're going to stay right around the 4.2, and that would make the Fed very happy. If it ticks up to 4.3 to 4.4, that would definitely be a reason to say, oh, wow, the labor market is deteriorating faster than we thought, and there is reason to worry. And the Fed will be looking very closely at that. Looking at the payroll headline number is also important. We obviously had a very weak July at 114. We were looking at something more closer to 165. But I would say that I find that those headline numbers on the number of jobs a little difficult to interpret recently, because we had this surge in immigration that boosted jobs last year. And the immigration's come down, but we don't know exactly how much. So it's a little hard to know what the right number is that's sort of consistent with just kind of that Goldilocks labor market.
I'm really glad you brought up immigration, because how are you thinking about immigration's contribution to the jobs data that we get? Does it show up in other jobs reports or mainly in the non-farm payrolls, or to the extent that it hasn't shown up in the way that you might expect? I'm just curious how we start to back out some of that impact, and so that we can really look at the health of the labor market.
Yeah, so it shows up in theory in both the labor market report from the establishment survey and the household survey, but we pretty much know that the census has not updated their numbers yet enough. And so the household survey is showing much weaker labor market, and that I think is sort of just misleading. So I think we look to those establishment numbers to look for the boost from immigration, and we had very strong growth last year, growth that would have surprised us, except for the fact that we know that we had a surge in immigration that contributed up to like 90,000 jobs at its peak a month. And immigrants do come in. It takes them a little while to get a job. They have a slightly higher unemployment rate when they first arrive, but they do get jobs relatively quickly. But as I said, we're not exactly sure how long it takes. We're not 100% sure. We know immigration has come down by all measures, but we don't have official data. So it just makes it a little hard to interpret. But I think most people think that immigration is still boosting those jobs numbers by 25 to 50,000 at this point a month.
Louise, do you think that we are in a situation where we could easily tip into a recession? There seems to still be a lot of fear in the markets that a recession is around the corner, and that would warrant multiple supersized rate cuts.
So, I think the fear comes from the fact that one of the things we know is when the unemployment rate starts to creep up, it often creeps up a lot more kind of quickly. It sort of starts slow up and then creeps up quickly. Now, the composition, when you look at what's happening about how much you have firings versus how much you just have slower hirings, shows that, layoffs are still quite muted. Unemployment claims are very low this morning. And so mostly it's taking longer for people to find a job, so hiring is slower. So it's certainly not a reason to panic. But I do think that the Fed, they don't want more deterioration than what we've seen. Yeah. They think the labor market is now in balance. And if tomorrow's number is a little weaker than we expect, I think they will probably decide, to move 50 basis points in September instead of 25. I'm not sure of that. But I think if it looks like maybe it is deteriorating a bit faster than we thought, that would convince them to move a little quicker in terms of cutting rates.
So it would be a critical number then, a critical report. Louise, really, really appreciate your joining us today. Louise Sheiner is Robert S. Curris Senior Fellow in Economic Studies at the Brookings Institution. And that really lends credence to the idea that it feels like a very determinative jobs report that's going to set the course for what the Fed decides to do, and then how it lays out the next couple of Fed decisions.
Well, the market certainly thinks so. Again, this always gets back to Jay Powell and whether he actually thinks so. And of course, he'll always tell us that, one data point does not necessarily
totality
make a trend.
Of the data.
But we've got the totality of the data to a certain extent, right? I mean, we've seen it all summer long.
Disinflation,
and of course, in the spring. And the trend is there. And we've seen the softening. And again, the question is, what is that softening telling us? Is this just kind of sort of a renormalization of the market or a real deterioration?
All right, coming up, we've got the Hunt family dynasty having more to do on their path to global sports dominance. We're going to hear from the Chiefs owners Dan and Clark Hunt next. This is Bloomberg. The Kansas City Chiefs are on a hot streak, and this goes beyond their Super Bowl victory earlier this year. Dan and Clark Hunt's $6.5 billion sports empire set to get a lot bigger with the long-awaited arrival of Wall Street investors to the league. Bloomberg's Julie Fine and Jason Kelly sat down with the owners of the Kansas City Chiefs before the NFL's decision to allow private equity investment. Take a listen.
Probably the biggest surprise has been the breadth of the interest in the NFL. I knew that there would be a lot of interest, but it's probably been even broader than I thought it would be. It goes beyond the funds that have been raised to focus specifically on professional sports. So I think it's going to give the NFL a great opportunity to have a significant group of very interested investors who can support the league's capital needs on a go-forward basis.
Dan, you've been around all of these sports for a long time. This broad interest, where's it coming from in your estimation in terms of the potential value going forward?
Yeah, I mean, there's been so much new wealth generation across the globe. And the NFL for so long traditionally was just an American ownership and an American game, if you will. But, the market and how the NFL has thought about growing its businesses is targeted, football globally speaking. And I mean, you got games coming up in Brazil the first time. And I just think so many more people are interested in it. And soccer is the global game, right? And so we have international owners in that business in Major League Soccer. I've been surprised, I feel like his assistant sometimes, with the amount of phone calls I receive with people wanting to talk about the private equity opportunity in the NFL. And I would always say, well, if you're calling about that, I'm not even going to bother connecting you. But it's been really great to see. But I just think there's been so much new wealth generation globally, and sports teams are prizes. And you've seen this unbelievable escalation in asset valuations. And, been so fun to be part of it. And you think back to our history and our investment in these teams. I believe our investment in the Kansas City Chiefs is $25,000. Our investment in the Chicago Bulls is $67,000. And now what these franchises are worth today. And, we were at a time in Major League Soccer where we actually didn't, pay for Dallas. It was, here are the keys, it's league owned. And now you see the franchise values eclipsing, frankly, even some of the EPL teams. You're seeing that in Major League Soccer now. And it's just great to be part of it. And I think there is a long, long runway for this, but those businesses have to be so thoughtful.
That was Kansas City Chiefs co-owners there, of course, the Clark brothers, speaking a little bit earlier with Julie Fine and our very own Jason Kelly. Julie Fine joining us right now to talk a little bit more about this interview here, accompanying a great big take on the Bloomberg terminal. And of course, we talk about the investment these guys have made, and we talk about maybe the potential investments, Julie, that could come into the NFL now that they have sort of finally embraced the wonderful world of private equity. Have the Clarks also embraced it?
Well, the Hunts have not invested, or the Hunts do not want to invest. Oh, no worries. The Hunts, what was so interesting is, Clark has been so involved in this in terms of from the NFL committee and getting this private equity deal to come through. But we actually asked them specifically, we said, would you be interested in private equity in your own team? And they said, not at this time. So it's very interesting. But, they went on and on during this interview and talked about their father, who's been intricately involved in the NFL for so long. And they always went back to that and said they want to do what's good for the fans and they want to do what's good for the league. And they really believe this is what's good for the league.
All right, I got to ask the question, and it's coming, Julie. What did they say about Taylor Swift, who is dating Travis Kelce? How does she affect them financially?
What was interesting, because when we asked this, Clark originally first said it was a very unique year, and not because we won the Super Bowl. But obviously, he was very quick to say he's seen them together and that they make a wonderful couple. What's really interesting, though, is he said their fan base has increased by 30%. I mean, that's just an extremely big number. New eyeballs on the team. They also talked a little bit about women in sports and women's sports. But yeah, that 30% number, that's a good one, and that's lucrative.
All right, and certainly a lucrative business, the NFL, but we have to talk, Julie, of course, about the original football, and that is what we here in the U.S. call soccer. Of course, they've been instrumental here in bringing the World Cup to the United States here, particularly to Kansas City and Dallas. What are their hopes here for those games once they kick off in a couple of years?
Well, I think it's really interesting. When we were discussing this, Jason Kelly actually said at one point, we always talk about the Super Bowl, but these World Cup games, sometimes they can have 4 times the amount of people watching them. So obviously, Dallas ends up with 9 games. Dallas has the most of any city. They were hoping, of course, for the final that went to you guys in New York, but Kansas City this year also getting 6. So what they hope they do is increase interest in the sport. If you look at MLS, it doesn't have the fans right now in America that you see with the NFL and you see with other sports. So they really hope it helps raise the exposure. And, you see what's happening with the Lionel Messi and the eyeballs that are coming to sports here. They're hoping to continue that.
All right, Julie Fine, along with her colleague Jason Kelly, have a great story on the Bloomberg terminal, a sit-down interview with the Hunt brothers here, of course, co-owners of the Kansas City Chiefs, and obviously a lot of other sports ventures as well, instrumental in getting the World Cup here, and I think a lot more.
Yeah, well, they now, all these Taylor Swift fans know who they are now in a way that they never did before. Yeah. All right, what's interesting about today is we obviously are covering a lot of sports because the Bloomberg Power Players Conference is taking place. And it's in advance of the big jobs report tomorrow, which means that markets were kind of just paralyzed for most of the day. Not a whole lot going on. Yes, you had declines in equities overall, and the Mag 7 recovered. NVIDIA certainly recovered, gaining for the first time this week. But it's all about just kind of waiting for that jobs report at 8:30 a.m. tomorrow.
Yeah, and I wonder if that's really going to be the game changer. I know we're making the most of it here, so we hope it's a game changer. But it gets to the idea here, too, that once we do get that report, you still have another big data point next week.
Yep.
And then, of course, a Fed meeting in just barely 2 weeks' time.
Absolutely. But, right now with the Fed focused more on the weakness in the labor market, this could be the determining factor. This is The Close on Bloomberg. A UK watchdog is opening an investigation into Ticketmaster's prices to determine if it breached consumer protection laws by charging excess fees for tickets. Now, it's practices like these that Sports Illustrated Tickets intends to evade. Romaine and I got to speak with CEO David Lane, along with the former NFL quarterback Drew Brees, about the role SI Tickets plays in creating strong transparency in live entertainment.
It is the transparent ticketing process. The price that you see is the price that you get. It's not one of those where you see the price and by the time you get to checkout, all of a sudden it's twice as to what it was before because you had this fee and that fee and this fee and that fee. So to me, that is the fan's first approach. The price you see is the price you get. It's going to be a better price than you can get anywhere, and it's access to every major live event in the country, whether that's sporting events at all the 4 major pro sports, including MLS, live concerts, other events. We'll have relationships with every team, every sports venue, both on the primary market and the secondary ticketing market. It's something we're very excited about, and yet another connection that the Sports Illustrated brand can have with fans.
Do you think that, Drew, that the fans themselves will embrace this quickly? I mean, I understand Sports Illustrated is a powerful brand, but we talk about the market dominance that Ticketmaster has had there, and a lot of people are just, let's just face it, kind of set in their ways here. How ripe do you think right now the demand is for this?
Well, I think it's ripe just because there's never been a greater thirst for live events. And at the end of the day, we're going to be right next to a lot of those big players in the ticketing marketplace. And we just ask fans that they're going to have options, right? And we feel like we are the best option because of everything that we've just said. It's a transparent pricing process. What you see is what you get. And we have built-in fan experiences that we will continue to evolve and generate alongside our great partners, both event venues and with teams, to continue to build the fan experience. Imagine an opportunity for fans to be able to take a picture from some of the greatest moments that they've had at live sporting events, being able to send it to Sports Illustrated as a result of being in our network, and all of a sudden they get the picture of a Sports Illustrated cover sent to them with the picture from that event that they were just in attendance at as a memory and a keepsake. There's certain things that we can do for our fans that the others can't.
So, David, talk to me a little bit about the value proposition for the company itself. Basically, how do you make money? Obviously, there has to be something baked in there to make this a profitable venture.
Sure. There's margin in every ticket that's sold across all of the marketplaces. Our competitors at this point are focused on the transaction fee line item and adding 25 to 30%. What our customers are seeing from the time they come onto the site is an all-in price. And so we'll have margin built into that ticket from the moment they see it for the first time to the moment that they pay when they check out. That entire view that we have of transparency and maintaining credibility, it's who we've been for 70 years. You trust Sports Illustrated. There's nothing that we would do differently than to make sure that fans are seeing and be educated. I mean, look, how many tickets have you bought? You're going to pay the price that you're willing and afford and that you can afford to pay. So why not give that to you at the very top of the funnel? And that's exactly how we've approached this. From the moment you see the price, that is exactly what you're going to pay when you check out.
And I think a lot of people want that transparency, not just with ticketing, but with honestly everything that they buy. David, just to follow up on that, though, are you competing on price with Ticketmaster and some of the other providers, or is that not really the concern or part of the business model?
Always. We have to be competitive, and we are. And so we're competing not just with Ticketmaster, every single ticket marketplace that is out there. And so we're always having to maintain a competitive market. But we are a marketplace that's bringing buyers and sellers together. The seller is determining what they think the fair market value of that ticket is. The buyer is determining what they can afford and are willing to pay. They're going to shop. They're going to be educated. Mm-hmm. But just like any other retail marketplace, bringing the two parties together, it's up to those two parties to come to an agreement. And Sports Illustrated tickets can create a transparent, credible, all-in pricing type of experience that today our competitors are not yet matching. We do think, as you mentioned, junk fee legislation, state attorney generals, all of the activity that's going around the live event markets and banking market and travel and hospitality. We think transparency is coming, and we're all going to benefit from it.
Understood. So, Drew, let me ask you, you invest in a number of companies. You've got quite the portfolio with investments in restaurant chains, theme parks, a lot of consumer-facing type businesses. How did you get involved with Sports Illustrated Tickets, not just as a brand ambassador, but as an investor as well? How much of the brand name of Sports Illustrated was a draw?
It was a huge draw. First and foremost, anything that I do from an investment perspective has to be authentic. It has to be with people that I want to be in business with, brands that I want to represent, that share the mission, vision, and values that I have for my life and the things that I want to put my time and energy towards. I think that right off the bat, I recognized the leadership that was in place with David at SI Tickets, but certainly the credibility and the iconic brand name that is behind SI Tickets. Sports Illustrated has been a brand that I think all of us has resonated with all of us for our entire lives. Ever since I was a kid, I always hoped and dreamed that I would be on the cover of Sports Illustrated. It was the cover of Sports Illustrated in the Wheaties box, right? Those are my two goals as a kid. I remember getting SI Kids, the publication, when I was a kid and just reading it cover to cover, right? And just dreaming that somehow, some way, someday I'd have that opportunity. I had the chance to be on the cover of Sports Illustrated 8 times, and it's been an absolute dream come true. And so now, full circle moment, the opportunity to get involved with Sports Illustrated in a bigger way with the SI Tickets platform and with the leadership that's in place with David Lane and the team he's put together, and just the marketplace that we're having a chance to enter into to really represent fans and give them the absolute best experience for the best price.
I am wondering how we make this experience a little bit more personal. And I think you kind of touched on that with being able to take pictures and things like that and upload them. I feel like that's missing a big part of it. And I feel like with my children, they don't have the same experience I had. I would just hang out at Wrigley Field and you just literally stand right there and the players walk right by and you interact with them, and you just don't get that anymore.
One of my greatest memories as a kid was going to a St. Louis Cardinals game and watching Ozzie Smith do backflips going out to field ground balls during pregame, and then he came over, and that was my first autograph ever. Was an Ozzie Smith autograph on the inside of my glove. So yeah, I'm with you, and I think that we're doing everything we can at SI Tickets to bring back the fan experience. We have some really exciting partnerships that we will be announcing very soon with organizations like the Patriots and others, where we will be the official fan experience for those teams and for those venues, trying to build in those moments for fans where it's not just about the game, but it's about the connectivity to the player, to the organization, to the venue, everything that we can to have families, both adults and kids, walking away saying, that was one of the most incredible memories and something that just makes them a fan for life.
And that was part of our conversation that we had with David Lane, the CEO of Sports Illustrated Tickets, and of course, Drew Brees, of course, former NFL quarterback, 13-time Pro Bowler, and as he just said there, Scarlett, 8 times cover model for Sports Illustrated.
There you go. He counted.
Yeah, I know. I guess it means a lot to him here. Of course, a future Hall of Famer, we should point out as well. And of course, we stay in the realm of sports here on this day, and we want to have our Muni Moment segment, and it is actually about, yes, sports, particularly the NFL. I was looking at this fun fact here, Scarlett. You got the New York Jets. You got the New York Giants, neither of which, I'm told, actually play in New York.
No,
so the real New York team is actually the Buffalo Bills, and they are going to reward their fans with a new stadium, but they got to pay for it. The Erie County Comptroller's Office is opening up a retail order period to sell $110 million in bonds to finance the new space. Max Adler wrote this story for us here at Bloomberg News. Joining us right now to talk a little bit more about a relatively creative structure to this sale here. Talk about it here. This is kind of the fans, I guess, to a certain extent, are going to kind of effectively have a piece of the action.
Totally, and thank you guys for having me. So what the comptroller in Erie County did was he set up a retail order period, and that will make these bonds available a day early for everyday retail investors. That's a day before they'll be available to institutional investors. And the officials in Erie County are marketing these directly to Bills fans as a way for them to have some type of ownership over the construction of the stadium. Not everyone that wants these bonds will be able to buy them. They're only making a limited number available during the retail order period, which will begin on September 23rd. The minimum investment for these bonds is going to be $5,000. And as the lower third is indicating, they will make $110 million of these bonds available over the period, over the sale period. And Bills fans have a particularly intimate relationship with the team. Last year during a playoff game, the organization had to call in their fans to help shovel them, shovel the seats with snow. So they're pretty confident that Bills fans will get excited about this and try to own a piece of the debt on the construction of the stadium.
They're just all incentivized to work together, Romain.
Interesting. We have another word for that, too.
Yes, we do. The county is selling, as you said, $110 million of these bonds, but the stadium is going to cost much more than that, right, to build. So how much are the construction costs, and where is the team and the state going to get the other funding from?
So you're right. The stadium is $1.7 billion. That's what they're estimating the total cost will be. That's ballooned up from about $1.4 billion when they originally pitched this. And $250 million of that is going to be generated by Erie County. They'll make about $125 million off of this bond sale, and then they'll pay for the rest of that in cash. And then New York State is also offering $600 million towards the construction. About $430 million of that is coming from a deal that the state struck with Seneca Nation over gambling revenues that were generated by that tribe, and the rest of it is going to be paid for by the bills. They are on the hook for any cost overruns, but this is a very large public subsidy. It's the second largest subsidy ever given out to a professional sports team in the U.S., only behind what Nashville and the state of Tennessee gave to the Titans for their new stadium that's being constructed now.
Max Adler, thank you so much. Max Adler covers munis for us. And of course, Romain, I guess it's fitting given that it is New York's one true team, one true football team.
It is one true team. As you know, I don't, the New York.
The Chicago native here speaking.
I don't know what you guys are doing. Keep your teams in the cities and the states where they're supposed to be. But this is novel too. I do wonder if it's a little bit of window dressing too, because there's always this whole idea of why are we spending public funds to build these stadiums rather than having the owners themselves come up with their own money. And I know this creates a little bit better optics because at least the fans get a piece of the action. And I kind of thought about Green Bay. I know it's kind of different because those fans actually have a stake in the team itself.
Equity.
But I wonder if you maybe going forward, there is a business model where fans can sort of partake in the upswing and these things.
I'm sure the private equity guys who are coming into the league will come up with a way to monetize that fan devotion and loyalty.
I love that.
I think we can count on it, right? Yeah. All right, still ahead, what investors need to watch for tonight and tomorrow. This is Bloomberg.
All right, let's push ahead. Here's what markets and other people will have their eyes on here over the next 24 hours. And we stick in the world of sports because that's where we've been all day. And there's a reason for it, Scarlett.
Yep. The season opener, Baltimore Ravens play against the Kansas City Chiefs, the Super Bowl winners in Kansas City. The big question, at least on my mind, is who's going to sing the national anthem?
Is it not going to be Taylor Swift? Because, I mean, that would be the logical thing to do because,
it makes sense.
Why not?
And capitalize on all the fans watching. No, it's going to be Coco Jones, who actually comes from an NFL family. Her dad played in the league with the Patriots, the Rams, and the Titans. Her brother also plays for the Falcons.
Oh, okay. All right. Well, good for her. I mean, we could tune in for Coco Jones and, of course, more so for Lamar Jackson and actually what goes on the field. Meanwhile, back in the world of markets and, of course, in the world of economics, we are going to get that big payrolls report, the monthly jobless number here in the U.S.
Yeah, and the unemployment rate is projected to go down to 4.2%. We'll see if it actually does. And the change in on-farm payrolls, 165,000 jobs added.
And I know you love Fed speak. This is going to be your last opportunity to hear it. New York Fed President John Williams, Fed Governor Christopher Waller before the blackout period, before the big Fed meeting in about a couple weeks time. All right. Thank you for joining us. We'll be back tomorrow. This is Bloomberg.